All right, let's jump right in. For decades, we've all known the US dollar as the undisputed king of global finance, but its reign is being seriously challenged. So today, we're going to break down this really fascinating, kind of subtle strategy that Washington seems to be rolling out to secure its financial power for a whole new digital age. This isn't about fighting the last war. It's all about winning the next one.
For the longest time, it all boiled down to this one simple fact. And this wasn't just about making things easy, it was about control. This global financial plumbing gave the United States this unique and incredibly powerful long arm. The ability to see global transactions, to enforce sanctions, and basically to set the rules for the entire world's economy.
And that right there is the crucial question today. Because the old system, it's showing some serious cracks. America's rivals are busy building bypasses, and the very foundation of the dollar's power is being tested in ways we've never seen before. This is what sets the stage for a massive global shift.
Okay, so first up, let's get to the core of the problem. Why is the throne starting to wobble? Well, it's not just one single thing. It's more like a perfect storm of economic, political, and, of course, technological pressures all hitting at once.
A big piece of this puzzle really starts at home. And you got to look at this number, $34 trillion in U.S. national debt. I mean, a number that massive creates a fundamental vulnerability. It just does. It makes other countries start asking questions about long-term stability and wonder if relying so heavily on the dollar is really a safe bet for their own future.
And at the same time, you've got all these external pressures mounting, and fast. The sweeping sanctions on Russia back in 2022 were a huge catalyst. It was like a global wake-up call. It showed the world just how powerful America's financial long arm really was, and frankly, that scared a lot of nations into taking action. So as a result, you see the BRICS countries, that's Brazil, Russia, India, China, and South Africa, hitting the accelerator on their own payment systems. And, of course, you've got China actively pushing its state-controlled digital yuan as a direct alternative for trade.
And this is where it gets really interesting, because you start to see this paradox emerge. The dollar's greatest strengths, its status as the world's reserve currency, and that powerful legal long arm have now become its biggest liabilities. You see, what America sees as necessary oversight, a lot of other countries now see as financial coercion. And that feeling, that perception, is exactly what's driving rivals to decouple from the U.S. system as fast as they possibly can.
So with all these threats, right, you'd think the U.S. would be on the defensive, trying to patch up the old plumbing. But instead, it looks like it's embracing a technology that on the surface seems like the exact opposite of centralized control.
And this is the central puzzle, isn't it? Why would a country that built its global power on financial surveillance and control suddenly start getting friendly with digital assets that are built on blockchains? It seems completely counterintuitive. But the answer? Well, it reveals an incredibly shrewd piece of financial strategy.
The answer lies with this financial tool, the stablecoin. Okay, let's be super clear about what this is. A stablecoin, like USDC, is not some volatile crypto. For every single digital token that exists, there is one real US dollar sitting in a reserve somewhere. And, this is the most important part, where is that reserve money kept? Mostly in ultra-safe assets, like short-term US Treasury bills. You gotta remember that part. It's the key to this whole thing.
And that brings us right to the core of the strategy, what the source material calls the digital dollar gambit. Now, this isn't about the government creating its own digital currency. No, it's about co-opting a private sector innovation to solve some of America's biggest geopolitical and economic problems.
The whole goal here is to create a self-reinforcing or virtuous cycle. See, the strategy isn't about forcing countries to use the dollar. It's about making a new digital dollar so useful, so efficient, that the world simply chooses to use it. And in doing that, they unknowingly end up strengthening the very system they might have been trying to get away from in the first place.
So this whole gambit really rests on three core pillars. First, it basically turns global transactions into a funding machine for U.S. debt. Second, it outcompetes rival systems by just offering a better product. And third, it maintains American oversight, but in a much more streamlined and, you could say, subtle way. Let's break each of those down.
Let's start with that first step, which honestly is just ingenious in how it monetizes debt. Just think about it for a second. A business in Argentina needs a stable currency for a deal, so they convert their pesos into a stable coin, say USDC. The company that issues that USDC then takes their real dollar and, like we said, buys a US Treasury bill with it. And bam! Just like that, a random business transaction in South America has helped fund the US government. Now multiply that by millions of transactions all over the world, and what you have is a vast, automatic, and privatized system for funding American debt.
Step 2 is all about winning the infrastructure war. You've got China over here offering its digital yuan, which is all about state control and surveillance, the whole shebang. The US Gambit is totally different. It's about fostering a market-based alternative. It's not about Big Brother, it's about offering a more useful product, something that's faster, more efficient, and connects you to the deepest capital markets in the world. It's a bet that, at the end of the day, utility will always beat surveillance.
And that brings us to step 3, the evolution of control. American oversight doesn't just disappear, it just gets smarter. Instead of trying to monitor every single piece of financial plumbing all around the globe, the US can simply regulate the handful of large, compliant companies that actually issue the stablecoins. The long arm becomes more of a softer glove, a smarter, much more efficient form of oversight that's focused on the choke points of this new system.
So let's zoom out for a second. This isn't just some clever financial strategy. This is a massive geopolitical wager. It has huge implications for the future of the global order. It's really a bet on America's ability to innovate its way out of a crisis.
And right here, you can see the competing visions for the future laid bare. You have the US model built on its deep capital markets and the value of pure utility. Then you've got China's model built on state control and surveillance. And finally, you have the BRICS alternative, which is less of a coherent system and more of a political project, really, driven by one thing, the desire for independence from the dollar. These are 3 fundamentally different philosophies for how global money should work.
And the stakes here really could not be clearer. It's pretty black and white. If this gambit works, the US not only helps solve its debt problem, but also embeds the dollar into the very fabric of digital commerce, securing its dominance for another generation. But if it fails, if regulation is too clumsy, or if some crisis shatters confidence, then America will have just cleared the path for its rivals to build and control the financial systems of tomorrow.
Which, of course, brings us to the final, lingering question. Is this pivot to a digital dollar, powered by private stablecoins, a brilliant act of financial statecraft, a true masterstroke that adapts American power for a new era? Or is it a desperate, last-ditch effort, a final roll of the dice, to save a system that's already in decline? The answer to that is going to define the global economic landscape for decades to come.